Hey, it's David here of 123 Day Trade. Thanks for being here. Thanks for watching. I want to go over the a trade situation that comes up occasionally, and I get this question asked. You know, I think it's pretty obvious when a skyscraper comes on, but I wanted to show you exactly what I mean by it. And uh, the trade entry itself whatever, came at right here at 10:28 today Central Standard Time. Day was October 5th. Wow, I lost a couple months there. October 5th, 2015, and this is the trading chart that I want to show here that I put up on my website at 123daytrade.com, and you can read my trades as I go through, kind of as I formulate my plan, and then I put it out there so that you can review kind of what I saw and how I approached the market. So at 10:20, I guess is at 10:26 right here is where we saw this escalation right here. Let me get my screen draw tool out. You know, I like my screen draw tool. Okay, so we see an escalation of price. This, by the way, is R1. I don't know if you can see that over there, but that's R1. And we see it had fought right underneath R1 for a lot of the morning. And then finally it busted out and it went up here. And this ends up being, I believe, the high of the day. At least it was the high of the day before I stopped trading it. Um, and what I mean by blow off volume in skyscraper is what you see down here below, right? Everything else around it makes it look, everything here is minuscule compared to, I know that's a hard word for me to say, but that's exactly what I mean. It's very minimum in relation to the maximum here. And this is one volume bar. In fact, it's 5 seconds worth of data that comes in and it produces a 3022 volume exchanging hands. And what really happens here is that what you have is stops are gunned and run, as I like to say, and the sellers come back in the market and they push it down at this point. That's how I view it, and that's how I look at it. So what I'm looking at, and when I see one of these skyscraper bars all by themselves, and we haven't had any high volume. Now, by the way, on this particular day, we didn't have anything that went above 1,000 in volume at any point during Monday's trading before this bar came out. So the skyscraper comes with what is, I think we had some volume bars that were um, let me see here. Yeah, like 906 and 904. Neither one of those is above 1,000. And then this bar shows up 3,022, and this is where the sell-off starts. I actually take my trade at 1028. This shows where I ended up getting in right at this mark right there. And then it reaches down to, I was looking at, originally I was thinking the market would sell off quickly and reach down at least to 3p, if not, and go on down to pivot. It didn't happen that way. It kind of hung around here a lot longer than I wanted it to. And so therefore, and I was down on the day before I took this profit trade right here is 1p, and I think I was down 10 ticks at this point, or 11 ticks, somewhere in that area. Um, and then I took 20, when I was down, I finished up 9 ticks, so I was down 11. I took 20 on this trade. I took 20 ticks out on this trade because it ended up being 40. That was what one. Let's see, is that, yeah, 21, 22, 22 ticks. I took out 22 ticks on this trade coming down, and I netted 9 overall during for the day. So I think that anyway. So long story short, with commission cost, it was a positive day. I finished on had 4 trades on the day, and this is the one that when I see it, I would like to be in it and stay a little bit stronger with the negative side of this. And I guess since we're talking about this, and this is kind of bonus for those that want to see, I run into this difficulty occasionally, and I want to show it here. This ends up being my first trade of the trading session, and that actually sets up my losing situation during the morning because I was trying to make up for. I know it was only a 13. Was it 13? It was a 13 tick loss or a 12 tick loss. Yeah, it was a 13 tick loss this morning on the first trade. This was the setup that I saw, and I looked at this as a double top, and I went short underneath here, right here, and this trade here is where I got stopped out coming back. Now this right here is the high of the trading day at the time of the trade right here, and I think it was at 46.75 was the high of the morning trading session, also the high of the trading day. If I would have used my 1R stop loss today, it would have put the stop up here at 78, which would have been above the high of the day. It would have been an extra 6 ticks. Then this market takes me out right here, and I lose 13. But I could have easily went in, and then the problem that I run into is that I get myself kind of in the mode that I want to get that money back. And if I would just have allowed the market to maybe run me out at the 78 mark, and in this case take me out at 19 ticks on my trading day, I would have been down $190, and then I would have been looking for trade number two, and trade number two would have come in on that volume, that skyscraper bar that we saw. I mean, there was some bracketed trades that we could have taken. There was some winning trades that could have been had inside the trading day and the trading session itself. But this right here would have been, at least if I would have stayed at the this is where top of range is high when close okay, the stop loss could be at the high of the day when you're close to the very tight range. In this case, it was very tight. 78 could have been the 1R stop loss today, and I would have stayed in the trade. Now, this most likely would have been a couple tick winner or maybe a 1p winner. Most likely, it only went down 2p. I would have probably only taken out maybe 5 to 10 ticks on the trading session, depending upon where this bar would have ended up at, and plus give or take the price action that I saw on the charts itself. It does come back, roll up through, and move up and forward and bust through this high and goes up very close to the R2 point that we saw in the charts here below, right? Is this one I want to talk about too? Let me just look. Yeah, this is the short. This is after I got in a couple times, but this was a short entry, and I finally was able to catch it in the lower high pattern. And no, I didn't. Anyway, so this here was the exit on trade 3, which I had to break even again on this one, and it ends up busting through the 75 mark, and it goes on up to, which was 45.75, I believe, was underneath this chart that you can see right here, and it goes up to a high of 46.90. If I would have found a trade that would have put me on the buy side of the market, I could have ended up with a more of a positive day, perhaps at least maybe make 1.5p on the way up. The market goes up 6p today from the open, which you wouldn't have been able to get in at the open. By the way, I was at 45.65. We never traded there during the morning session that I was looking at. But the market does move up 128 ticks during the day before it starts to sell off, and the skyscraper here comes in. This was a signal for me to get short. I took it, and then I was able to get positive on the day because of it. So I hope that helps in your trading, as it helps in me to be able to tell you how I looked at stuff and how I could have traded better, I guess is how I look at it right now. Trading is all about trying to be perfect, but in a trade, you got to know your exit point of all times. And I felt comfortable with the 72 stop today, but I would have felt just as comfortable taking it out at 78 and losing an extra $60 on the trade. instead of losing 130, I'd have been just as comfortable to lose $190 and be looking at that second trade with the skyscraper coming in, and then being able to maybe take 1p or 2p and still net out a positive day on the day. So, or I would have taken 2 losses in a row and lose around $400 and be done on the trading session. So whatever would come what may in that case, I would have been just fine with. So you got to put yourself out there. In other words, you got to put skin on the table, as one of my trading friends would say, so that you can realize the risk to reward. And I try to take what I believe, or what I call HPT trades, high probability trade setups. And when I see one of those skyscrapers like this right here, that gets me pretty excited to be able to hopefully find a good place to be able to do something in the market. In this case, I wanted to sell at this point because it would take a lot of momentum to be able to drive back and up and through this. It took over 3,000 in volume for us to get above that mark and all that sell off. So it would take an extreme amount of volume to get above and beyond that mark again. It might go up a little bit above it, but then it would take a lot more to drive it even higher. All right, that's how I view the market. That's how I look at it. It's about 12 minutes, 11 minutes, and 30 seconds worth of me talking. God bless. Take care. We'll see you on the next video. Bye for now.